The problem is we have different things, right? So in 2021, interest rates were zero. The Fed was printing money and the government was sending checks out to most Americans. Now we have 2023, interest rates are 5%, which again, remember, sucks money out of the system. There's no quantitative easing, and the government obviously is not sending checks out. So I think investors have to be very, very careful here. I've seen many bear market rallies. This has all the earmarks of another bear market rally.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
I would love to get your thoughts on the recent statements from the Fed and what they're planning to do with rate hikes. We know it's in smaller increments of 25 basis points, but they could go higher if inflation continues to get out of control.
Yeah, so there's no doubt that they're starting to kind of come to the end of their rate hike cycle. But I think what investors may be misreading right now is not hiking rates doesn't mean lowering rates. And I think that's one of these things where we've seen quite the rally, and we saw in cryptocurrencies recently, in the stock market, as the Fed was kind of coming to the end of this. We obviously know Jerome Powell recently said basically that, and the markets ripped to the upside. But I think at this point, smart money, I'm seeing a lot of distribution from big institutional sellers. It seems like they're using this to unload into the retail crowd, and that should be a concern for every retail investor.
For sure. So do you see this as like a bear market rally, both for the stock market and crypto?
Yeah, I do. I really do. So some of the signs, so one of the things, and this is a psychological aspect of trading, is that we always try to relive our past glory days, right? So when we think about what we've seen recently, we've seen some of these altcoins rip up 100%. We've seen Bitcoin take off, people getting so bullish so quickly, even though if you look at where the chart was on Bitcoin at 69,000, a bounce to 24 is not really that big of a move in comparison. And then you look at some of these stocks that have run. I mean, Coinbase ran up from like $30 to $85 in a few weeks. I mean, just an incredible move. We've seen Tesla stock go parabolic recently. And what's going on here is as we've gotten this January bounce in the market, a lot of retail investors have gotten very bullish, thinking it's going to be a repeat of 2021. The problem is we have different things, right? So in 2021, interest rates were zero. The Fed was printing money and the government was sending checks out to most Americans. Now we have 2023, interest rates are 5%, which again, remember, sucks money out of the system. There's no quantitative easing, and the government obviously is not sending checks out. So I think investors have to be very, very careful here. I've seen many bear market rallies. This has all the earmarks of another bear market rally. And one of the things that I've learned is that bear market rallies there's a term for it, and it's called rip your face off rally. It's like so intense. And that's the way bear markets are. You have these reflex rallies that are really intense and unbelievable. And they really pull at your emotions to make you want to go bullish. And you just see things keep going up and up and up. But again, you just have to step back and look at the bigger picture. And if you go to the weekly charts, the monthly charts, this does have the earmarks of basically run-of-your-mill past bear market rallies.
Do you see this rollover happening in the next 2 months? What's your time horizon for that?
Yeah, absolutely. So here we have the chart of the S&P 500, right? And again, what I think investors are really queuing off of, there's a couple things that are bullish in the near term here. So number one would be basically the fact that if you look at this low, we've made a higher low and also a high and a higher high. So in terms of short-term bullishness, there's no doubt about that. In addition, there was a trend line that was broken here where we also went above it, which people are saying, okay, this is a big breakout. This is the start of a new bull market. The problem is I've seen many, many markets during bear cycles do this exact thing. And we've seen a market that comes back to the lows and even makes new lows. And so again, that's the problem I'm facing here, is that to me, until I see some of the other factors align, to me, this is not a bullish breakout of a bull market or a new bull market. The other thing I would just like to point out, like for instance, if we go to a chart of Alibaba here, right? So Alibaba, by the way, the Chinese stocks have had a tremendous rally. But just to give you an example of what I'm talking about, take a look at this trend line. So this trend line is from the all-time highs on Alibaba. You hit it here, 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 and down here, and then you broke out. Well, this is kind of where we are on the stock market right now, this breakout. But then look at what happens. We actually came down and made new lows on Alibaba. And so this is, and again, I'm just bringing up this stock, but you could look at a lot of stocks, and a lot of them do have this similar breakout, and then they fail and come back and make new lows before we get another big bounce. And so if we go to the S&P 500, to me, what does that tell me? Well, if we're going to head back down and we're going to make a new low, where is your likely target going to be? And that would be this trend line right here, which was your pre-COVID high. So to me, and this probably plays out over the next 2 months, I would say. And I think, again, we're maybe even starting to see that weakness creep back in. We've seen all of these kind of former meme stocks run very similar to the top in 2021. I think this is an interim top inside of this bear market, and probably within 2 to 3 months, we're down to this trend line at around 3,400 on the S&P.
Bitcoin was moving pretty strong as well, and then the alts were following, and we're seeing different alts pop off here and there. I swung trade some alts myself. Didn't really do anything with Bitcoin, but are you seeing kind of the same thing where it's going to roll over? Maybe we go test that 10 to 12,000 or whatever it may be.
Yeah, so as of now, that is what I'm seeing, and I've been pretty, even in spite of so many people bullish, I've had to just stick to what the charts are telling me. And again, it's been a great rally. It looks monstrous, but what I mentioned in the beginning when we started talking was if you zoom out on the chart, we have to take it into account, right? So here's your big M top, and this was the recent rally. Now, interestingly enough, if we look at this low here in June to the high in August, that's almost the same distance as from here to here. So again, you have to kind of keep it in perspective versus, I know everyone wants to get excited that Bitcoin's headed to 100,000 or higher, but right now it again just appears to be that bear market rally. In addition, there was a classic top signal here on Bitcoin. This is called the topping tail. And this was put in right here. As soon as that happened, that's a note to investors that you're likely going to see a fall. And that's exactly what we've seen. We've seen Bitcoin starting to come back in. Now, I'll give you the technical support levels. Now, I think eventually we break all of these to the downside, but right now, this would be your next support right around 21,300. This is that pre-FFTX collapse where we came up to it and we pulled back, then we broke through. And then if that gets taken out to the downside, you have this beautiful trend line, the midpoint of here with these lows over here. So these would be your next two downside supports. Ultimately, I'm still in the camp that we see 12 to 13, maybe even 9,000 before we really bottom out. And again, there's just so many things in flux, right? If I'm looking at a stock market that's headed to 3,000, that's a 33% decline in the stock market from where we currently are. It's hard to imagine somehow, a risk asset like Bitcoin currently is not seeing a drop back down to 12 or 13,000, maybe even sub 10.
A lot of investigations going on. What is your thoughts with that and, the narratives forming as well?
Yeah, so I think that's part of it too, right? You have the side where you have risk assets, like let's say the economy spins into a recession, the Fed, maybe inflation is still too high for them to actually cut rates versus going to neutral. That's also going to be a tricky thing for the stock market. That then a stock market sell-off is negative for crypto assets in general. And then you obviously have this regulation stuff, which again, this is stuff that it's going to make investors in crypto uncomfortable, right? We don't know the end game. We don't know the rules yet of what's a security, what's a commodity. And so all of these type of things absolutely will throw that extra bit of uncertainty into a crypto market. And very easily you could see a dump out. And this is just being super honest with the public, is that, even though I think it's going to 12 to 13, maybe 9, it's not like I'm waiting with my cash to buy at 9, right? I'm smart enough to know that I'm not smart, meaning that I don't know the exact low. And so what that means is that when it was in the 17 range, I picked up a 1/6 position, meaning that it was 1/6 of the bag that I want to accumulate on Bitcoin. And basically what I said to myself is every 2,000 to 3,000 down, I'm going to just add another 1/6 until I have a full 6/6 position, right? And so I think that's kind of where I am right now, is that ultimately I do expect potentially to go as low as 9, but I don't want to be left with nothing in the Bitcoin bag if it doesn't get there. And so that's really where dollar cost averaging, once you get down in the sub 20,000 level, you're now really close to the lows. Even if it goes to 9 from 15 and change, which was the low, that's in the scheme of being at 69,000 all the way down to here, it's not that big of a move anymore. So I think investors, I always say that because I don't want investors to just be like, oh, I'm only buying at 9,000 or 10,000.
Right.
You kind of have to start to say, what's my long-term thesis on Bitcoin? Is it bullish? And if so, then you just basically have a game plan as it comes down and you execute that game plan.